Relocating to a new country can be both exciting and challenging at the same time. As a newcomer, you're going to navigate through the banking system in the US, and let me tell you from experience, it can be a bit challenging. However, by the end of this video, you will know how and when to open up a bank account in the US, how to properly build your credit score, and how to avoid from common pitfalls that could have cost you thousands of dollars down the road. Howdy everyone, it's Oyer Cannon here, and let me start with a disclaimer. I am not a financial advisor and I'm just trying to help out, but do your own research and make sure that you understand everything. Many of new relocators are kind of confused about the bank situation, especially before their move. And I would argue that opening up a bank account in the US is important for pretty much anybody who's ever considering to move here. Okay, so what do you need in order to open up a bank account in the US? First and foremost, a form of identification. And if you're not a US resident, passport is also going to work. You need to be at least 18 years or older in order to do that. If not, you need to bring a guardian with you. Another thing you typically need is a proof of residency. Now, it's not true for every bank in America, and some branches are going to be a bit more flexible and not really look into that. Other branches are going to ask for proof of residency, but all the branches that I have seen look at this document and then never do anything with it. But the main thing to know here is what is the branch going to do. So it's really good to communicate with local groups and see if somebody knows anybody in the branch and what are they typically doing in order to open up a bank account. For me and my clients, I have my local branch that I always use. They kind of know me, they know my clients, and they just make the experience very smooth, and we don't have any issues opening up bank accounts for people that are outside of the US. Last but definitely not least, you need to be here in person. If you're trying to open up a bank account in the US and you live abroad, it's going to be an issue. You need to physically be here. So the next time that you're flying, maybe it's a work trip, maybe you are scoping the area, make sure that you go to the branch that you already kind of did a research on and open up a bank account and start the process. So what happens once you have a bank account? You're going to have three main artifacts and a bonus 4 that is kind of the most important one, but we'll get to it. You're going to have a checking account. The checking account is typically where you hold your cash, where you are actually conducting transactions. When you pay your bills, you're going to do it from checking. When you are paying for any type of commodity, you're going to do it from checking, and so on and so forth. The second thing you're going to have is a savings account. In the savings account, you should put your cash reserves. Doing that, splitting your cash between the checking and saving, allows for some buffering and some added security layers, because you're not going to share your savings account information with anybody, but you are going to share the checking account sometimes when you're doing any type of transfers or, register to a service. So it's just an extra layer of security. The third thing you're going to have is a debit card. A debit card is kind of misleading because it looks exactly like a credit card, but it's nothing like. Whenever you swipe a debit card, the funds are being deducted directly from your checking account. And although it might sound tempting to just use it all the time, like for me, for example, I would very much rather having the funds being removed directly from my account instead of later. When you are working with debit account, you don't get any type of benefits of using a credit card. And that's why, typically speaking, you shouldn't really be using your debit card in the US. You should always use your credit card, but you just need to do it the right way. Which brings me to the fourth artifact in your banking account, and it's going to be the credit card. And typically the large banks are going to just offer you a credit card of their own. Sometimes it's going to be a secured credit card because you don't really have a credit score yet and you're not really trustworthy according to the system. We'll talk about it in a moment. And when you get a credit card, basically what happens is that you get a credit line, and you can use this credit line to purchase artifacts, and you pay the bill later, and you can do it within a day after the purchase or maybe after 15 days or a month. You shouldn't do it after a couple of months because then you're going to accrue some crazy interest rates. All right, so with all the banking information out of the way, let's talk about the big elephant in the room, and that is the credit score and the credit system in the US. Having a credit line, it's basically like having a friend who is loaning you money that you can use, and then you're just going to pay them later. But the friend is a big bully with a huge stick that can really mess up with your life if you don't do it properly. Think about like Tony Soprano with a baseball bat and a chainsaw. So Tony gave us, that's fine actually. So basically my friend Tony came to me and he's like, hey, or you have $10,000 of credit line and you can go and you can spend and pay whatever. And as long as you pay me back by the first of the month, we're good, man. Nothing is bad. However, if you don't pay me by the first, I will start charging you points or interest for your debt. You never, ever want to be in debt with the credit card company. It's always a bad idea. Just don't do it. Okay, so now that I understand what it is, it doesn't really sound like a good value proposition. I would just use the debit. Why do I need to deal with them? So the benefits of having good credit is that now you can take loans, and these loans are going to be a lot cheaper for you. And the number one loan, the biggest loan, is going to be, you know what it's going to be? Mortgage. When you have a great credit score, taking a mortgage is going to be significantly cheaper compared to having a bad credit score. If you don't have a good enough credit score, you might not even get a loan. And for the most of us, buying the house is going to be the largest transaction we're going to make, and having a mortgage is just going to help us achieve our goals. So having this tool in our little Batman utility belt is really important. But there are other benefits of having a good credit score. If you're trying to buy a vehicle, if you're trying to buy a cell phone, if you're trying to do a bunch of things, having a good credit score is just going to open up a couple of doors for you, and it's for free. Like, it doesn't cost anything. You just need to do it, and it's not that difficult, but that's what the video is all about. The other thing is not really about the credit score, but more about using the credit card. When you use your credit card, you're literally going to make money out of it. A lot of cards offer you just crazy things, like the Amazon card that offers you 5% cashback. This is literally 5% discount on acquisitions in Amazon up to a certain level. That's free money. When you get like 3% cashback on whatever it is that you're doing, that is free money. Getting miles and travel points and then utilize them to buy another airline ticket, again, free money sitting on the table, doesn't cost you anything. Because of all of these like free money, free points, whatever, I would argue that any informed and responsible individual should use their credit card. They should just be doing it well. You never want to mess with Tony Soprano with his chainsaw. Okay, so we understand that using credit cards can be good for us, and we understand that having a good credit score can be beneficial for us as well. So let's understand how is it being calculated. Our credit score is going to be calculated based on 4 parameters: utilization, payments, history, and credit checks. Utilization means how much of the credit line are we actually utilizing when the credit bureau is checking us. So the credit bureau is going to check us around the 1st and the 15th of the month. They're going to look into our accounts and be like, hey, Or, so we gave you a credit line of 10 grand. How much are you owing to the credit companies right now? And if I'm owing them $9,000 at the time of the check, they're going to say that my utilization is 90%. However, if I owe them only $500, they're going to say that my utilization is 5%. Having low utilization is going to help us build the credit over time. We don't want to be over 30% when they're checking the utilization, and we want to keep it under 5% when possible. The number 2 parameter is our payments. Are we paying back in time? Payments mean both the payments for the credit company, like every 1st of the month or whenever the bill is due, and for any type of loans that we took. If we took a mortgage loan, if we took like a car loan, anything of that nature, when we pay it back, we're building a record of paying back our debt in time. If the bureau looks into our payment history and see that we always pay in time, they're going to up our score as well. The number 3 parameter is the history, and this one is the one I hate almost the most. History is the amount of time that we have the oldest account and the newest account average. So if I have one account from 5 years ago and I just open up an account today, my credit history is 2.5 years. And if I have 10 accounts that I opened 5 years ago and one account that I open up today, my credit history is 2.5 years. It doesn't make any sense. I really hate this one. But it's not the one I hate the most. The one I hate the most is number 4, credit checks. And this one just boggles my mind. I don't really understand it. The credit bureau is going to look into the amount of hard credit inquiries that have been performed on our account. And if we have more than, I don't remember, like 6 or 8 over the course of the last 2 years, they're going to reduce our credit proportionally. So that's kind of unfortunate, and I really don't understand why, but it is what it is. Now, it is important for me to note that there are 2 types of credit checks, a soft pull and a hard pull. The soft pull is not being recorded anywhere. So if somebody is soft pulling your credit, no ding is going to happen to your account. But if it's a hard check, there is a ding, something like 6 to 8 points, typically speaking, and it's going to remain there for 2 years, and then it's going to disappear. Which means that after 2 years, nobody's going to remember that somebody pulled your credit, some time ago. All right, so now that we understand the parameters, let's understand how to actually build our credit well. So here are some actionable tips for you to utilize in order to make sure that your credit score moves up and up and up over time. Number one is about utilization. We want to keep it as low as we can. So we need to set up a reminder at the 13th of the month and the 14th of the month. And we want to go into our bank account and just pay our bills. And a good practice would be to leave $1 there. This shows that the account is still active, but you don't really use anything. So having zero utilization is fine, but having like a point something percent utilization is slightly better. If we are super busy and we're not sure that we're going to do it, one thing we can do is set up an auto pay. Auto pay will just pay the account as it goes, and this way we don't really deal with missed payments or high utilization. Another thing we can do with regards to payments is actually taking a loan. Now this one has been very counterintuitive. When I take a loan and I return it, it shows that I'm good for the money. It shows that I pay my bills in time. And you should avoid from taking loans as a part of necessity. You should doing it for leveraging your funds, but that's material for another video. What I am saying is if you're new to the US and you want to build your credit score and you're buying a car, even if you can pay cash, take a loan for, I don't know, $1,000 or $2,000 out of the total car payment. Return it, the interest rate is going to be almost nothing, but you are showing that you're returning your payment over time, and building your credit is going to be worth a lot more than 5% interest on $2,000 of a loan. With regards to history, first, you should never close your oldest account. Remember, the credit history looks at your oldest account. So even if you're not using this credit card anymore or your bank account anymore, just keep it, don't use it, but you want it there so your history score is increased. The other thing you can do is becoming an authorized user on somebody else's card. Let's say that my father lived in the US. I would ask him, hey, can I be an authorized user on your card? Don't give me the card. I don't want access to the card, nothing like that. But I want the credit bureau to look at my name and see that I am associated with a card that has been there for like 30 years. After you build some of your credit history, you can remove the authorization from there. And typically, like, it doesn't cost anybody anything. It can just help. So if you can do it, do it. And if you don't, don't. Another thing you can do to increase your utilization is to increase your credit line. So after you've been to the US for like 6 months or maybe 1 year, speak with your bank and be like, hey, can I increase my credit line from 10,000 to 20,000? Oftentimes, they'll do it. You can also open new credit cards, especially ones that give you really nice benefits. But remember that opening a credit card typically comes with a credit check. So you don't want to open up a card that's not going to approve you. And this type of vicious cycle of can I open it? Will it be approved? Is rough. And I can tell you that as an ex-Amazon employee, when I used to work for Amazon, Amazon declined me for a credit card 3 times. I'm like, guys, I'm good for the money. You are paying me this. With regards to credit checks, just make sure that nobody runs a hard inquiry on your credit unless it's absolutely necessary. So when I went to my mobile provider and I was like, hey, I want to open up an account, they were like, okay, we're just going to run your credit. And I told them, no. Maybe instead, take a deposit. Can you do that? And they said, sure. And I gave them $100 of deposit. I got it back and they didn't pull my credit. You can do this with several other vendors. When you are going to get like a mortgage pre-approval, eventually they will pull your credit hard. But for the pre-qualification, you can do a soft pull. There are many hacks like this. So the point is, don't run a hard credit inquiry unless it's absolutely necessary. That's pretty much it for the tips. The one other thing I want to mention is how to monitor your credit score, and you can do it using Credit Karma. It's a free app that you can download. I'm not associated or affiliated with them, but it's a decent app. You can download it and then it kind of monitors your credits. I just want to point out that whatever score they're telling you, you're probably something like 15 to 20 points below that score, so keep it in mind. I think we should have split it into 2 episodes, but if it was valuable for you, please consider leaving me a like and please consider to subscribe to the channel if you're interested in finances or real estate in Austin or anything of that nature. If your relocation is going to be to Austin, Texas, or if you're considering to invest here in real estate, reach out to me. That's what I do and I'm fairly good at it. Thank you so much for watching and I'll see you on the next time.